call the meeting to order. Our first item on the agenda is to approve the minutes for the February 10th, 2020 meeting. Can I get a motion and a second, please?
I'll second.
All right.
Mr. Garrison, how are you voting?
I was trying to do it audio.
Okay. Mr. Garrison, you
Oh,
vote.
you're voting yes?
Yes.
All right.
Thank you.
Motion passes 4-0. Next item is item 3 is a presentation of the investment performance review for the period ending March 31st. And we'll also, we have Doug Anderson with us.
Francis, you have something else on the screen. We can't see the agenda.
Okay, I thought I was sharing the agenda. Because I see it on the screen. I can stop the share and see what happens.
Okay, there we go. Thank you.
This is Doug Anderson here. Am I able to share my screen for the reports? It says that I'm disabled right now.
Okay, if Francis or Alan, I'm not sure how to have him share his screen. Do I need to turn mine off first?
Doug, can you just go ahead and give a verbal report, please?
Absolutely. Yeah, I'm more than happy to. So what we have sent out already is the 331 report, which is sort of the not quite the bottom of the market, but it was fairly close to it. If we look back over the year so far, February 19th or so, thereabouts, market hit an all-time high, equity market. And then we entered the sharpest bear market of recorded history. Market appears to have bottomed so far as of March 23rd. And equities have improved significantly since that. Again, we're looking at the major issues facing the economy right now are recession, a government enforced recession, actually, the first one in history. Again, because of the coronavirus. B, recovery, how that's going to happen. And then I think one area that's especially pertinent to us in Oklahoma is the joint supply and demand shock to the oil markets, which are affecting oil prices because Russia and Saudi Arabia decided to increase production at a time when oil demand or oil usage has gone down precipitously. So as I go through the report, I think the important things to remember is that guided by long-term investment policy. We are guided by long-term rates of return. And the last thing that we wanted to do during this period of high market volatility was to panic and do something that would be unwise. And we did not do that. We have parts of the portfolio that are meant to participate in equity rallies. We have parts of the portfolio that are meant to help us when equities are down, and all of those did perform as we had expected, not necessarily as we would have liked. So looking at the cash flow and the contributions, when we're investing contributions going forward, if nothing changes, we'll be investing those in equities. If we are going to be rebalancing, we'll be rebalancing away from fixed income. Remember that we are long-term oriented here, and long-term orientation as investors saves us a lot of issues as long as we have adequate liquidity, which I believe that we always do. The things that I am seeing in the marketplace right now are, is if we would have gone back to the heart of the panic, I guess you could say, bond markets have recovered. Bond markets finance the goings of the U.S. economy, and there were some periods of time where even Treasury bonds were trading with limited liquidity. But as of that March 23rd date, when the Federal Reserve came out with a secondary set of market supports, things have traded much better since then. You may have heard about the oil market trading briefly negative last month, around April 20th, and that was more of a technical factor, but it does show you that some things in the marketplace are not really functioning normally right now. As far as our investment managers go, remember our large part of our equity exposure is passive, performed as it should. I will say that the parts of the portfolio that were hurt the worst going towards the end of March have been the parts that have recovered the fastest. In fact, I'm looking at two portfolios that we have that off of the bottom. So this is perfect market timing. From March 23rd to last week, they're up in excess of 40%. So remember that one of the reasons that we stay invested is because when markets move quickly to the downside, they tend to recover quickly to the upside. And if you try to time the market and get out near the bottom or as markets are going down, then traditionally you miss much of the recovery. Looking at the market value, again, I'm trying to keep this very brief today. We started the year with $68 million. That's total market value. And then during the first quarter, like most folks out there, we saw significant declines in that market value. So we ended the first quarter with just under $58 million. I look at the market value as of last Friday. And again, this is not returns based. This is the market value as of last Friday. We're up to almost $64 million. So the recovery has been there. But again, this is in the medium term, markets will stay volatile. The volatility has come off significantly. I think the prudent thing to do is to maintain our allocation by investment policy. If we do need to take cash out of the portfolio for any reason that we're in a negative cash flow environment, I would recommend taking those funds from our active duration bond portfolio, which did exactly what it should. It stabilized the total market value. But again, no other major moves from that at this time. When I look at the costs of the investments, they are reasonable. I'm recommending no change to the status of any of our managers. We're staying in very, very close touch with all of them. As a matter of fact, at noon today, I'm having a conference call with Causeway, our international equity manager. I've spoken with Loomis Sales already, spoken with Lord Abbott already. And again, just making sure that we are understanding what's driving markets over the short term. And there's really, I think that even folks like Warren Buffett, if you paid attention to his call or his meeting that they had last weekend, the market moved so quickly off of the bottom, not even Warren Buffett had a chance to take advantage of that volatility. So what you're seeing is, the word is so overused right now, but unprecedented efforts to stabilize the economy until we can get things reopened. And I think the unprecedented part is a direct reaction to, we've got 30 million people who've been put out of work over the last 7 weeks, which again, not even the Great Depression do we see this many folks put out of employment that quickly. The March 31 report is there. You can also see our April 30 update. And that you can see a partial recovery from some of the managers. For the month of April itself, the total fund was up almost 9.6%. So again, recovery out of periods of extreme volatility tends to be very rapid. And if we had room to move assets around, it would be probably a 2 or 3 step process to move back to target. But again, the positive cash flows that we get to this fund on a near regular basis probably take that path rather than taking money away from fixed income at this point. Now, again, we've got, roughly a third of the assets in bonds. and roughly 2/3 in equities, including international equities. And given that we're long-term investors, I think this is where we need to be. So I'm happy to take any questions. I hope I'm not cutting it too short, but in the interest of time in our new format here, I want to leave more time for questions unless I'm of me talking about reports.
Are there any questions for the trustees?
I guess I would make a comment. I expected the impact to be more dramatic than that. I thought, all the stuff we've been seeing on the news and everything, that it would have been more catastrophic. So that is somewhat encouraging.
And I would agree with that. And you're not alone in that reaction. I think that one thing that we also should remember is that financial markets and the economy are two different things. And the equity market tends to move ahead of the economy. If you look over history, the equity market starts moving higher faster than the economy itself. And I think that the relief efforts that the Federal Reserve and the Treasury are very targeted to stabilize the economy for the time being, but then also in a way stabilize the market so that they are functioning. I mean, the worst thing that you can see, not the worst thing, but it's very problematic when the financial markets, especially the bond market, stops transacting. Because it really separates the ability for companies to get capital if they need it. And I wouldn't expect interest rates to move higher for some time. I mean, the biggest contributors to higher interest rates are employment, which is very low right now, and energy prices, which don't appear to be moving higher in the near future. So that's true. I mean, over the last year, the total fund is down 2.73% through the end of April, which is not what we want, but it lies somewhere in between our target rate of return and catastrophe. And it's probably a little bit better than most people expect.
All right, any other questions? All right, well then we'll move on to item 4. We need to receive the monthly investment flash report for February 29th, 2020, March 31st, 2020, and April 30, 2020. Do we have any other discussions? Moved by Ted Carlton. Seconded by Laura Johnson. Please record your votes. Mr. Garrison?
I vote yes.
You vote yes. Thank you, sir. Matt, and it passes 4-0, 5-0, 4-0. Next item is item 5, discussion and consider approval of additional asset allocations or changes to portfolio fund managers as recommended by the board or the investment consultant. It's my understanding that we do not have anything that we wish to consider today. Is that correct, Mr. Boggs?
That is correct.
Okay, so we will move to item 6, which is approve renewal of agreement with BOK FNA DBA Bank of Oklahoma for custody services retroactive to May 9th, 2020 under the same terms and conditions as approved on May 9th, 2016. Matt, can you just tell us a little briefly what's, I guess we got, somebody's moving it, so go right ahead.
Yes, and this is just the next year in our Bank of Oklahoma contract, who serves as our custody bank for the investments that we have in the trust. And so what this is just renewing the exact same terms that we agreed upon when we went for a RFP a few years ago. It's just the next 1-year extension of that.
Was there an increase in the price?
No.
Okay, so there was no change in costs. Okay.
Will we be bidding this, doing another RFP, or will this continue on until we determine that we need to do an RFP?
We are entering into our last year that was agreed upon, and so in the next year we would start the process of doing an RFP for custody bank services.
Okay, thank you.
I think more than likely we'll see the RFP at our next quarterly meeting. Is that correct?
That's correct. With the setup we have with doing quarterly meetings, we found it's better to get the ball moving earlier than we maybe would have otherwise. That allows us to do the full process and get that through by the time we need to approve it next year.
All right. If I could get a motion to move it.
I vote yes.
All right. Mr. Garrison votes yes. Motion passes 4-0. Item number 7 is acceptance of the annual financial report for fiscal year ended June 30, 2019. I believe we have somebody from accounting. Rhonda Shelton is going to give a brief presentation over the annual financial report.
And Brent, I do not believe we had a presentation on the accounting report because this is just the acceptance from the report from the prior year.
I was expecting somebody to, well, I'll tell you, we ended our net position.
Can you hear me?
Yes.
There he is. There she is.
Here she is.
I'm sorry.
Okay.
I thought I was unmuted. My phone was telling me I was unmuted, but I evidently wasn't. All right. So, yes, I'm Rhonda Shelton. I'm from Accounting Services. In August, we presented the preliminary June 2019 unaudited financial statements. The financials were finalized in late November, but did not make it on the the February agenda. So we are here to, we are at the acceptance phase of the June 2019 audited financial statements now. Look at page 7 in your agenda packet, the financial statement that was included in your packet. You will see that assets increased $6.9 million to 67.2 million, while liabilities remain stable from the prior year. If you turn the page to page 8, you will notice that contributions and benefits paid for the year ended in 2019, they remain stable, while investment income decreased $1.6 million. The year-ending net position for June 2019 was $64.9 million compared to $58.1 million for fiscal year 2018. This is an overall increase of $6.8 million. And then lastly, if you will look at page 22 in the financial statement, I'm turning there myself. For the year ended June 2019, the planned fiduciary net position as a percentage of the total OPEB liability presented as the fund ratio from the year-end actuary, it increased from 12.10% to 13.21%. That is all that I have to update from the preliminary financial statement that was presented in June to the final financial statement that was finalized in late November.
Hey, thank you, Rhonda. Does anybody have any other additional questions for Rhonda? My apologies for not getting this on the February. We will make sure that doesn't happen this next year. You will get this.
Yeah.
So.
Yeah, definitely.
All right, with that, I would like to get a motion. We've got a motion and a second.
I vote yes.
And Mr. Garrison votes yes. Motion passes 4-0. Thank you, Rhonda. And then
Thank you.
item 8 is approve the fiscal year 21 annual budget establishing revenue and expenditure budgets.
Hi, Brent. This is Lindsay McNabb from the Budget Office, and I'll present the annual budget. Hopefully, y'all have it in front of you. But this year's for FY21, the total budget's $28,278,209, which is a decline of about $1 million from last year. There's many differences that I'll go over. First, participation continues to shift from the higher costing indemnity plan to the Medicare Advantage plan, causing a decline in the premium expenditures. Second, we're increasing our estimate for the interest and dividend income by 1.2 million. And then lastly, we had a decrease in the general fund contribution of 1.8 million. And this is to match the required employer contribution. So for FY21, we're reducing it to match what the required amount is. In years past, we've had a little bit of extra, but with the current conditions of the economy, we were trying to reduce general fund expenditures. Even with this decline in the general fund, we're still estimating to add 1.7 million to the reserves. In FY20, we're anticipating adding 7.8 million to the fund balance. And that with the 1.7 million in FY21, we're estimating to end FY21 at 67 million for fund balance. And as Rhonda stated before, we're at 13% funded for the liabilities. That's all I have to present. If anybody has any questions.
Does anybody have any questions? Not seeing none, I'll take some motions.
I second.
All right. Thank you, Neil. All right. And Neil, you vote yes on this?
Yeah.
Or?
Yes.
Okay. All right, the motion passes 4-0. Finally, we have item 9, to ratify the claims listing. It should be in your packets. Does anybody have any questions about any of the claims? They would like Matt to explain. Not seeing any, I will take a motion. Thank you, Laura. Thank you, Ted.
I vote yes.
And Neil votes yes. Passes 4-0. Item 10 are reports, comments from trustees, staff, and interested parties. We'll start off with the trustees. Neil, do you have anything you'd like to add?
No, I don't.
Okay, thank you, sir. Ted, do you?
I do not, thank you.
All right. Laura, do you have anything to add?
I just want to mention and follow up a little bit on something that Doug Anderson said about the importance of staying the course, even when things look really, really scary. And that I think that we'll be able to demonstrate a much better result by not trying to actively manage our way out of the economic situation that happened and let the financial markets do their work. Not to say that we shouldn't carefully monitor like we have Doug and his team hired to do, but that we should take advantage of the fact that we have experts working on this and remain calm in the face of all this chaos. And that's all I needed to say.
Okay. Thank you, Laura. We talked to Doug last week, and he talked about the timing of when it really goes, when things go bad to when they start to recover. And I like their approach. We're in this for the long term, and we just need to continue down that path. So All right. Anything from staff? All right. anything-
I don't have anything at this point, Brent.
All right. Anything from any interested parties? I don't know if we have any interested parties watching today, but if you have anything to say. All right. So with that, leads us to item 11, which is adjournment. And so therefore we are adjourned.